Good evening, everyone, and welcome to this special live episode of Scotonomics. We're going to have a Q&A session. Myself and I will be joined by a special guest for this evening. I just want to say welcome to everyone. I know we'll have quite a few people who are joining us for the first time. So my name, if you don't know me, is William Thompson. I'm the founder of Scotonomics. I'm a political economist, and we've been spending over 2 years now trying to help people explain and help people understand a little bit more about the Scottish economy, the UK economy, and the global economy. And tonight we've got a very specific topic to discuss, which is the recent decision by the Scottish Government, should they be returned, the SNP administration in 2026, to issue government bonds, Scottish government bonds, which would be the first time that's happened. So this show is going to be as long as we have questions from the audience. We want to be quite precise and condensed in this so that we can encourage a lot of people to watch this episode to make sure they understand everything about this idea of issuing bonds. So please do, any questions and comments, drop them in. I'll make sure myself or my special guests for this evening answers them. But also please do feel free to drop in any thoughts you have on any of the issues we cover. But welcome everyone, let's get going. Hello, Jim. You're my special guest, Jim Osborne from the Scottish Currency Group. Thanks very much for joining in this evening.
Hi, William. I've been looking forward to this for a few days. So, yeah, good to be here.
Brilliant. Let's get stuck into it. Before we get into the content, though, why don't you just introduce yourself a little bit to our audience?
My name is Jim Osborne. I'm a member of the Scottish Currency Group. I've been a member of the Currency Group since 2020. I was involved in the Yes movement in 2013, 2014. I've got a particular interest in pensions, but I've got a wider interest in currency and public finances more generally, and I've taken a particular interest in this issue of Scottish government bonds.
Fantastic. Well, thank you very much. We've both written articles. I think we both posted them, maybe not last week, the week before.
Yeah, the article I wrote was published in Bylines on the 18th.
I published an article either the same day or around about the same time on the Scotonomics website. It was interesting, Jim, wasn't it? Because they're completely separate. You and I didn't speak to each other about them, but there's certainly some key themes that any reader would come out with, a lot of consistency in what we wrote. For those who haven't read either of those articles, I've actually put links into the comments, and they're also on the show notes beneath the video on the platform you're looking at. But do you want to just give us a few kind of highlights or a summary of the article that you wrote as an introduction to what we're going to cover tonight?
Yeah, sure. Sure. So, there were several themes in the article I wrote. One of them was really just to go over what I saw as the main motivations and rationale by the Scottish Government for issuing these bonds. I also spent a paragraph or two explaining the difference between primary and secondary bond markets and the significance of that difference. I also those were the two main parts of the article. One of the things I didn't cover, and that was really because I ran out of space given the word limits I had to work with, was ask the question what was the process by which the Scottish Government had in mind for issuing these bonds? Because there's no mention of setting up the equivalent of the UK's Debt Management Office, for example. So I think that question is left hanging, and it seems likely that the Scottish Government are going to outsource the issuing to some big investment bank or other and pay them thousands of pounds in fees to do that, which is completely unnecessary. And the main conclusion of my article was that if the Scottish Government is going to issue bonds, which I thoroughly agree with, and I've done for a long time, so does the Scottish Currency Group, is that it doesn't make sense to issue bonds at this stage into the global bond markets. It's more sensible to issue the bonds to domestic investors domiciled in Scotland, and that includes the general public. Scottish Government should not be issuing bonds in global bond markets until we have our own currency and we're independent. So those are the main issues. So in terms of the motivations at which I picked up from reading the outline plan document was One was to attract more foreign direct investment, to attract more interest, foreign investors in the Scottish economy. Secondly, it was to try and establish Scottish government credibility in the bond markets. Thirdly, rather worryingly, one of the motivations was they saw issuing bonds as a means of strengthening fiscal discipline, to quote the paper. And the other motivation was to diversify the sources of borrowing, which in principle is sensible, but not the way they've chosen to do it.
Yeah. Okay. Fantastic. I think I would just add there, because that's a really good list you've got. You've got the reasons that they did this was FDI, credibility, fiscal discipline, and diversification. But also, I wanted to, excuse me, or I picked up this idea of a little bit of kind of path dependency, and that eventually we'll have to go to international markets for our bonds when we're independent. So why not start this now? Let's get the ball rolling with us understanding, being seen, being known in the financial markets. So would you agree that's kind of another, they are looking ahead slightly towards independence?
Yes, they're looking towards independence, but I mean, for me, the fact that they're looking forward to independence within this kind of mindset is worrying.
Okay, great. Yeah, I think what is unusual is to see them doing something where they are actually looking ahead to independence. That's fairly rare when you look at Scottish Government. If you looked at the Scottish National Transformation paper that they did a couple of years ago, or anything really, that's pointing towards an independent economy, it looks like someone somewhere is at least thinking about how does this impact when we're independent. So that is quite unusual. Well, thanks very much for that. My post was similar. I basically said that it's much more of a political decision than it is an economic one, because it's a relatively, you could even say, trivial amount, and we're talking 450 million each year. It's absolutely tiny when you compare it to government spending or overall Scottish GDP, but there was certainly a political aspect in behind it. What I also picked up on, similar to you, was that the framework that this has been created under is clearly a neoliberal framework, and you already highlighted this idea of fiscal discipline, which you'll never really hear a heterodox economist say that. We would talk about sound finance rather than fiscal discipline, and also the credibility of the bond markets. Those were a couple of things that kind of that popped up to me. I thought what was quite interesting was to look at who had given this advice, and I uploaded the investors panel, and I said, who was it that was actually giving, who was asked for this? The process would be the government said, we want to, let's say diversify, get more FDI. What should we do? And the answer came back, let's go to private banks for finance. And I put in my blog, if you ask a group of bankers and lenders if it's a good idea for the Scottish Government to borrow from them and pay them interest, they're very likely to say yes. That's what happened. And to me, it looked like there was a clear case or argument for some kind of corporate capture on that investors panel. There was no one, we really like to see people from trade unions or a heterodox economist or someone from a well-known policy think tank. There was none of that. It was in the main bankers. So those were the few things I picked up on. We've got a first question coming in. Thanks, Hashbury. Jim, I'll drop this one to you first. Okay, I'll put it up on screen. Good evening. Would the Scottish Government bonds be affected by the ratings agency? Okay, this is a brilliant question to start with, because it kind of gets to the hub of the issue here. We heard the Scottish Government Minister saying this is fantastic because our bonds have been classed at the same as the United Kingdom. So that means that the bond markets are looking at us and saying, hey, those guys are a great bet. We're glad they've got some bonds. We can't wait to give them money. And this was kind of trumpeted as success. Do you want to unpick that idea of the rating agency, the connection to Scotland as currently a member of the United Kingdom, and other things that pop out from that? Thanks, Hashbury.
Yeah, I think that the Scottish Government is quite pleased to have got these credit ratings. But it is quite clear from various independent commentators, economic commentators, that they've acquired these credit ratings because they've got the fiscal backing of the United Kingdom through the fiscal transfers as part of the Union. So that suggests that in terms of thinking into the future of independence, that the government hasn't really thought through, because if we once we're independent, we will not benefit from fiscal transfers from the United Kingdom. Now that will severely dent the credit ratings that the rating agencies give to the Scottish Government. So these current credit ratings are not relevant to the future after independence. So they don't really warrant a viable test of our future credibility.
Yeah, I agree 100%. We're looking at a future and basing some kind of market reaction on what we are now. And the whole point of independence, as we all know, is to become separate from the United Kingdom. So I think it is really important that those the credit ratings are based on the fiscal transfers. But Jim, I also looked at it there, that any borrowing from the Scottish Government is fundamentally backstopped by HM Treasury. Yes. Scotland will not be able to. When you look at who is underpinning the lending, it's the Secretary of State who signs off on lending when we go through the National Loans Fund. But if Scotland borrows on the international market, they know that the UK government is going to make sure that Scotland pays its debt one way or the other. So I think it's really important to say that the credit rating we've got is because of the current economic position we have as the United Kingdom, and it will be very different when we become independent. And I would say we would have a lower credit rating, almost unarguably a lower credit rating than we would have as part of the United Kingdom. Would you agree, Jim?
Yeah, I would agree with that. That's on the assumption that we continue to use the pound. I think if we have our own currency, the situation will be completely different. But there's another issue in relation to this credit ratings thing, and that is that although Scotland's been given the same credit rating as the UK as a whole, that doesn't mean that its borrowing costs will be the same as the UK's, because there are a number of other issues. There's no guarantee that the bond markets will accept the same rate of interest from the Scottish Government. And one factor involved in that is what the markets will view as the redenomination risk. You give that another nickname. It's the independence factor. Now, one of the features about borrowing is that, and this is why, in one sense, diversifying the borrowing source away from the National Loan Fund makes sense, because borrowing from the National Loan Fund, we're borrowing from a sovereign lender, which means that
after the UK government, just to make that clear.
Yeah, after independence, with our own currency, if the lender is a private lender, we have the ability to redenominate the debt into our own currency, but we can't do that when we're borrowing from a sovereign lender. So I'm pretty sure that everybody who works in the global bond markets realizes that to be truly independent, Scotland will have its own currency, and therefore they will factor in the redenomination risk into their calculations of what yields they want.
Okay, that's I want to come back to borrowing, because I want to apologize to the audience, because Jim, you and I have jumped straight into this and we haven't really explained what the current process is. So that's completely my fault. Do you want to do a little 1 minute summary of what this announcement was? I said at the start it was 450 million for us to borrow, for Scottish Government to borrow with Scottish bonds. But do you want to put just a wee bit more context, just so that we know that people are all on the same page?
Well, we don't know how they're going to issue them, but, whether it's going to be through an investment bank or through some government body within the finance ministry. Not sure about that. But what they will do initially, these bonds will be sold into what's called the primary bond market.
Yeah. Sorry, Jim, just a second. Sorry, I don't think I explained myself there. I don't think people know what we're talking about. I've just had comments. Yeah. So basically, the Scottish Government is able to borrow at the moment 450 million every year from the National Loans Fund. And we do that through the Secretary of State for Scotland, and we borrow money on Scotland's behalf. And we do that through the UK, effectively through the HM Treasury or the UK Exchequer at the moment. The Scottish Government said, well, actually, if we're able to borrow a total of 3 billion, why don't we borrow 1.5 billion from international markets rather than from the UK government? Now, this is all within the fiscal framework. They can't borrow any more than that. They're only able to borrow this certain amount. But the decision is to effectively, as I said in my article, was to almost switch lender. Right now, we're borrowing 3 billion from the National Loans Fund, which is a UK government, and we've decided to borrow 1.5 from international finance markets. And that's the detail that we want to kind of unpick. Okay, brilliant. I've just had a couple of comments from viewers, so hopefully that's got us all on the same page. Okay, Jim, do you want to go back to this idea of the primary and secondary bond market? We often hear commentators talk about bond markets reaction and bond vigilantes, and I often say the question should be, which financial market are you talking about? Which bond market are you talking about? So do you want to give us a little rundown on the difference between the primary bond market and the secondary bond market? And then I think we'll be able to go into a lot more of the detail.
Well, the primary market is where the market where the bonds are first issued into. These are the first purchasers of the bonds, and they will say it's a £1,000 bond that matures in 10 years with an interest rate of, say, 5% on it. So the primary market buys the bonds on those terms. Now, there's a lot of talk about how the changes in interest rates are influenced by the bond markets and how that affects the cost of government debt. But trading activity in the bond markets does not affect the government's liability for that bond once it's issued. A 10-year bond for £1,000 with a 5% interest rate is paying £50 interest a year. That stays fixed. So over 10 years, they'll pay £500 in interest in total. And then at the end of the 10 years, they will pay the £1,000, what's called the principal, back. So their total liability is £1,500. That doesn't change, regardless of what happens to that bond in the secondary markets afterwards, where they're bought and sold by bond traders. And bond traders are buying and selling not because they're particularly interested in how a government's doing or how the economy's doing. They're more interested in maximising the returns for their investors, who they work for, the pension funds or individual investors. They're just trying to maximise the returns. So they will be shuffling their bond portfolios around to try and maximise those returns. It's nothing to do with what a government's doing or its government's policies.
Fantastic. So Scotland will be issuing all these bonds in the primary market. So we'll be going to market and saying, this is what I don't know. We don't know if they're going to do it by auction or if they're going to set a set price for it. We don't know any of those details yet, and we really need to find that out. But let's assume they go to market. We have got 450 million worth of new Scottish bonds. Who wants to give us funding for that? That's the process. Now, you kind of covered briefly there this idea of borrowing costs, and you gave us an outline there of how much more we might need to pay. What would be your assumption? Is Scotland likely to have to pay more to borrow on financial markets than it does currently from the National Loans Fund? What's your gut tell you on that?
That's a difficult one to predict, to be honest with you, William. The National Loan Fund, the interest rate charged by loan from the National Loan Fund is 0.11% above the bank rate,
which is very low for
So I mean, it's not going to take much for it to become more costly to issue on the bond markets, that's for sure, particularly if the bond markets are taking account of this independence factor in the redenomination risk that I talked about a few minutes ago. Yeah. So yeah, it's very hard to say they can do it more cheaply.
Yeah. Okay. I think that's a good a good answer. Also, on top of that cost, we have to add in the expense or the cost of issuing these bonds, because the banks don't do that for free. They're going to charge, as you said at the start, maybe tens of thousands, if not hundreds of thousands of pounds for maybe they're going out and seeing who's interested in putting them together, or they're going out and selling it and managing it. There's certainly going to be an extra cost compared to where we are now with a new process. Have we any idea of what that cost is, Jim?
I can't remember, but the report that the government issued, the outline plan of the programme, it discusses these costs, and there's a number of charts which set those kind of cost scenarios out. I can't remember the actual details, but they are there in the report.
Yeah. Okay. Great. So there's some kind of ideas that there will be an extra cost to this, and as I said in my article, it's clearly this is going to cost more. What we have to do is some form of cost benefit analysis to see is it worth us paying this extra money? What are we getting in return? You know, as you said, if we are attracting foreign direct investment and that's seen as a good thing, if we are diversifying and that's seen as a good thing, then maybe you can weigh this and balance it up that it is a good idea to do that. Now, we've got a really good question from Ben. I know you and I have got slightly different answers on this, so this should be interesting for our audience. Ben has said to me, would an independent Scotland government need to issue bonds? Jim, you go first.
The answer is no.
Oh, we do agree.
An independent British government would not need to issue bonds. This is assuming it's got our own currency. If a currency issuer does not need to issue bonds, but that doesn't mean that they shouldn't. It's a policy choice to make. Government bonds are they're not actually debt. They are actually a form of savings for the private sector, and they're an important financial asset for financial institutions like pension funds, insurance companies, and banks. They're particularly important for pension funds because they're a safe, liquid asset which enables pension funds to meet their liabilities to pay pensions out. They contribute towards pension funds' cash flow, so they have an important role within the financial infrastructure. So, strictly speaking, there is no need to, but there are very solid financial reasons for issuing them.
Okay, great. Well, bonds tend to be something like a gilt, which is longer term, and I think an independent Scotland doesn't need to do that. I do think that an independent Scotland will need to issue bills or treasuries, which are much shorter term denominations. So I certainly think there's a big role for public debt, but I think we just need to look at exactly what's best for Scotland when it becomes independent. But thanks very much for that question.
There's another important point here, and that is that although I think the Scottish Government should issue bonds, it doesn't have to sell them all. One of the constraints that the UK government has voluntarily adopted, it doesn't need to, is what they call the full funding rule, which means that they are required to issue bonds to the full value of any fiscal deficit, which compels them to have to sell them all. If you have to sell all your bonds, you become a price taker, not a price maker. So Scotland could issue its bonds, but if the markets won't accept them at the interest rate that the Scottish Government is offering them at, we can withdraw them.
Yeah, that's a really good point, and that will be really interesting to see, because you would hear an argument, well, if we did that, it would completely undermine our credibility because bond markets need to know that we're going to be able to buy they're going to be able to buy what they want. So it's a really interesting point. That is going to be interesting to see what the process. And you're right, we have a choice. We offer it at a particular rate. If it's not sold, we don't do it, and then we could offer it again at another period of time. So there's interesting points there. I want to go back to that question that Ben asked, and I want to just turn it around because you gave a really good answer there. Would an independent Scotland need to issue bonds? And you said if it has its own currency and if it doesn't have its own currency, but those are two different things. So if Scotland's still using sterling, I'll ask you that question again. Would an independent Scotland need to issue bonds?
Yes.
I agree, 100%. Scotland will need currency from somewhere, and if it doesn't have its own currency, then we're going to have to borrow more currency into Scotland, and that's one of the huge issues around having and maintaining maintaining sterling is that you're going to have to go to either the UK government or financial markets and borrow the currency and pay the interest rate that they want on that borrowing. Whereas if you had your own currency and the economy needed currency, then the Scottish government would just be able to create that currency and would decide what interest it wanted to pay on it, either through whatever form of government liability that created that money. So a very different position, and I think it'd be really good for us to see if there's an understanding of that difference and the timeline for the Scottish government when they're announcing the duration of these bills.
There's another way of looking at it is that if Scotland continues to use the pound and we're independent, then we are swapping dependence on the Barnett formula for dependence on the bond markets.
Absolutely. And these are this is a decision that I think the Scottish government are clearly making, and whether or not that is, as I said, purely political or economic or financial is an interesting question. Okay, I've got another couple of questions here. Could independent Scottish bonds, so assuming the bonds that we're talking about, be used as personal private savings?
Well, I think that is that a question?
Yep.
Are you asking it, or is one of the audience?
One of our Tubatistic 2008 is asking that.
Right. Okay. Well, my response to the announcement of this bond program was that yes, Scotland should issue its bonds, but it should issue them to investors and savers domiciled in Scotland. One good reason for that is that it keeps the interest rates in the Scottish economy.
You mean the interest repayments?
Sorry?
Do you mean the interest repayments in the Scottish economy?
Yeah, the interest repayments stay in Scotland, so they benefit Scottish savers and investors. In the overall scale of things, a 1.5 billion bond issue is vanishingly small in the context of the global scale of the global bond markets. It's invisible almost. I mean, it's even minuscule against the UK government's annual bond issuances, which is in the region of 300 billion a year. So it's a tiny speck. And there is plenty of capacity within the Scottish economy for savers and investors in Scotland to take this bond issue up within Scotland. I mean, for example, the local government pension schemes currently manage assets in the region of 70 billion. 1.5 billion of them is a drop in the ocean. So the capacity to absorb this bond issuance within Scotland exists, and we should use it.
Great. And we need to get to the bottom of that, exactly why that hasn't been the chosen destination, and more news on how we're going to do that later. But I'd say to Tubatistic, it's such a good question, because we would want the answer to be yes, this is exactly what the bonds are for. They're to allow Scottish private sector, private investors to invest in Scottish infrastructure and receive the rewards from that. That's not how it looks at the moment, because we're expecting in financial markets, which would be predominantly financial institutions, to buy these bonds. Now, it's very possible they could buy the bond and then they could offer them for sale. They could split them up and they could come back and they would get another commission on top, and the Scottish private sector might be able to get them. I'm sure some Scottish private sector might bid or get these bonds anyway, but that's not what they're used for. And I think you've hit the nail on the head there. I think that's what they could be used for. So thanks very much for that question. Next one, should the benefit from issuing bonds be spent on infrastructure or improving services? And Hashbait, I think you mean, what are we going to do with the money? I think that's what you mean, and that's pretty clear. These are bonds that are going to be spent on investment, and John Swinney has said they will help us fund infrastructure assets in Scotland. So that is what they're going to be used for, which is exactly what money from the National Loans Fund does right now. And John Swinney was really clear in his press release. He said, this is not new funding. This is replacement funding, and this is not going to do anything different than the funding we had before. So he was really clear in that, which was good for him to say that, because it does kind of narrow the other reasons why we're doing this then.
Well, any borrowing powers that the Scottish Government have within the fiscal framework are limited to capital investment anyway. You can't use it to cover day-to-day spending.
Great. So got to be for some form of infrastructure. Now I've got, let me see, I'll ask you another question and then I'll go through, because we've got quite a few questions coming in. But have we any idea on the term of these bonds? So let's say it's 20, they said it's between 26 and 27. But let's say in 27 we issue bonds. They'll have to be repaid in sterling. They'll have to be over at least 5 years, maybe more, if we're expected to get some form of return from the investment. Any idea or hints on what the duration of these bonds is likely to be? And if not, what's your feeling?
There's no indication on that in the paper at all. I mean, different maturity of bonds, different lengths, 5 year, 10 year, 30 year, 50 year, they all attract different rates of interest. Longer dated bonds tend to require a higher rate of interest to be offered. Shorter dated bonds offer a lower, can be sold at a lower rate of interest. So I suspect they will probably go for the shorter end in terms of the maturity of the bond issue, but I'm not sure. But if they were going to issue to the Scottish public, then I would say that a 5 year bond would be about the right duration for that, so that people are tying their personal money, their personal savings up for a limited period of time. Whether or not bonds issued to the general public would be allowed to be bought and sold on the market is another question. I've got an open mind on that, but potentially you could have non-transferable form of 5 year bond issued to the general public, and they could be made available through the post office network or local banking hubs, which often partner with the post office.
Yeah. Okay, so no real idea. I mean, the UK sells bonds right up to 30 years, so we've got no kind of indication. But what you would hope is that there would be an understanding that these bonds shouldn't be sold over that includes a period of time when Scotland has its own currency. That's kind of what I would be. That's kind of where I would be looking at, unless we were pushing that to be able to redenominate those debts. It's a fairly complicated process, and it'll be really interesting for us to understand exactly what the thoughts are around the redenomination and the length of these bonds, considering Scotland will be hopefully potentially a separate nation by the time that these bonds expire. Here's the technical, and this is probably a legal question, Jim, so we'll probably just have to take the question. But what happens to bonds issued under Scotland as part of the UK? Does an independent Scotland have to honour them, or is the RUK, would they be responsible for pre-independence bonds? And I take it, Martin, you mean including the ones we're issuing now? Jim, any thoughts on that?
I think the Scottish Government will be responsible for them. Any borrowing in GB pounds, which is still outstanding for repayment at independence, will have to be paid back to the UK government in GB pounds. Bonds which are issued to private investors, any that are outstanding at independence, if we have our own currency, they could be redenominated and paid in Scottish currency. But anything that's been issued in terms of a loan from the National Loan Fund, which is still outstanding, would have to be repaid in Scottish pounds and in GB pounds.
Okay, great. Well, what I would say is if we borrow from the Loans Fund, it is underwritten, signed off, sponsored by the Secretary of State for Scotland. So that issuance of money can come into question, because when you say, well, actually, who is it that's underwriting this if we don't want to pay it? Whereas if we go to the money markets, it will be probably Shona Robinson who will sign this on behalf of the Scottish Government, which means there'll be a legal contract between the Scottish Government and lenders rather than the UK Government via effectively an intermediary. So I do think that the money that we'll borrow will have to be paid by the Scottish Government. I don't think there's any way out of that if anyone was thinking about a need for there to be an out. But as I said, Jim, we're speaking about such small amounts that really this idea of kind of running up loads of sovereign debt, and we're just not really there, because we're talking about 1.5 billion, which is just a tiny percentage of overall government spending or Scottish GDP. Scottish GDP is 220 billion. So it's not even 1% of that. So it is a tiny amount. I don't want us to get too concerned about owing that little bit of money in what will be a foreign currency. Alan has a comment, I think, but Alan, I'd love to know if you've got any more information on that question. Isn't there a caveat regarding independence attached to the possible loan? I haven't seen the detail. I don't know if there is. Jim, have you seen anything that would suggest that there will be some kind of independence caveat into these loans?
No, I've not seen anything on that. No.
Alan, if you have, please do drop us where you're picking that up from, and any more questions, that would be great. So we've covered a few of these issues that we said in the comments we were going to do. What we haven't spoken about is, what does this tell us about the economic framework that the Scottish Government are using at the moment to understand finance, money in Scotland? And then second part of that, what does it tell us about the understanding of how things would or wouldn't change in independent? Do you want to do the first part of that, Jim? And then I'll do the second. So what does it tell us about their understanding of money and finance now?
Well, the whole reading of that report, it's completely dominated by orthodox thinking about what money's all about and about the whole issue of currency. There isn't any long-term consideration of what the implications of all this is post-independence. They don't seem to have thought through the reality that if we continue to use the pound, the credit ratings will plummet and the yields demanded by the bond markets will soar. They haven't thought that through. And they also haven't even thought about, well, what if we had our own currency, which completely transforms the whole landscape completely. So today's credit ratings and today's bond yields, when they do hit the market in a couple of years' time, they're completely irrelevant to what happens after independence. We're in a completely new scenario then, and they haven't thought that through. You said that there were some signs that they were starting to think about preparing for independence, but if the government was really thinking seriously about preparing for independence, they would be thinking about creating a prototype equivalent to the Debt Management Office. They may even start to think about creating a prototype stock exchange where domestic investors in Scottish bonds can buy and sell them. They're not thinking about these kind of issues. So the time horizon seemed to me to be very short term.
Okay, that's good. That was me giving the Scottish Government the benefit of the doubt, which I don't tend to do very often, Jim. So give me that one, please. But I agree with you completely. This is an opportunity to start to develop institutions, and a debt management office tends to be the part of the government that issues and retires public debt. And what Jim's saying is that if we're going to do this seriously, then it'd be quite a good idea for us to start doing that now, because there's absolutely no reason, if we're issuing public debt, we couldn't have a Scottish debt management office. And I'll take your point on the stock exchange as well and say this is an opportunity to say to people that we've got assets, Scottish Government assets that we would like to be traded in Scotland in some way or other. So it'll be interesting to see if there is any thoughts and consideration about how a decision like this can be used to start to create the types of institutions and the infrastructure we need. That was a two-part question, and you've tied them together about what does this tell us about the economic understanding now and in the future. And I think you did a really good job on that. So all I'm going to add is that this is further evidence that there's a really clear understanding in the Scottish Government of the different economic impact of having your own currency compared to using sterling. It's almost like this is just seen as, well, it's just another little sign in front of some money. And what you and I would both argue to the hilt is that this is a huge fundamental difference between how you manage an economy as a user of a currency or as an issuer of a currency. And we picked this up in the EU rules paper. We've picked it up in almost all of the Scottish Government's economic paper. It's impossible to argue that something works for you as a user and in the identical way as it does from an issuer of a currency. But there is nothing that even acknowledges things would change. Nothing in that paper says this will change as soon as we have our own currency, or this will be impacted when we have our own currency. We will be able to demand lower rates, or we'll be paying more rates. But there's not even an acknowledgement of these things being fundamentally different. And for me, that's the big concern as we look forward to an economic prospectus, that this lack of understanding of money, currency, and the impact it has. Have you picked that up as well, Jim?
I think the thing that I'm most worried about from that paper is this emphasis on issuing in the bond markets as a means to strengthen fiscal discipline. I mean, that is voluntarily subjugating yourselves to the bond markets. And knowingly doing that because in the belief that the bond markets will keep you on track and keep your fiscal discipline enforced. I mean, that is just abdication.
Absolutely. But that fit, how perfectly does that fit with the understanding that we need to mirror the EU's fiscal rules? It just completely fits into that framework that what we've got to do as a nation is say to the international finance world, bond markets, here's all the things we're going to do, so that we're not going to do anything or much that the Scottish private sector needs or wants, because we're going to make sure we're fiscally constraining ourselves by being wonderful borrowers, and you make sure that you always get your returns. The market that they're focusing on is the wrong market. They should be focusing on the Scottish public and the population as a market that they need to persuade that they've got the right idea for Scotland's economy, not focusing on an international bond market. Because importantly, Jim, and I really want to highlight this, Scotland is a tiny speck. This idea that loads of people will be looking at us and seeing how we're doing and marking everything down, we're pretty much insignificant in the global financial world. We should be concentrating much more on the Scottish private sector, Scottish industry, Scottish goods and services, and that's what I don't see any of these papers doing.
Yeah.
Okay. We've got a few minutes. I'll see if there's anything else coming in. Any Northern European country that we would want to emulate in terms of how they issue bonds? I'll certainly say, Ben, I'm not over how lots of other countries issue bonds. I just know that most of these countries have their own currency, and if we wanted to emulate them, that's what I would be doing, having our own currency and emulating them by issuing bonds if we needed to in our own currency. Any thoughts on what we can learn from other nations, Jim, at this stage?
Well, I'm not particularly familiar with how other countries do it, but as far as I'm aware, the belief in a full funding rule is fairly commonplace across the developed world. Governments believe that they must obey the wishes of the bond markets. They believe that they have to issue bonds and sell them all. So they all basically accept that they are price takers and not price makers. So I'm not so sure that we've got anything particularly radical to learn from other countries. They basically follow the same rule book as the UK does.
Yeah, and that is the fundamental point, is that what the Scottish Government is doing is just replicating what happens in the United Kingdom right now. And so many of the independent supporters I speak to say the last thing we want is the Scottish Government to replicate anything that's happening in the United Kingdom, because of the mess that's being made by successive different governments. And we really need to do something different. And this gives us the opportunity to do something different, but there's no evidence that it's going to be different. We've got a really good comment here from Adriana Terry, if that's your full name. She, hi, as an outsider listening and seeing this movement, what's really stopping Scots declaring independence? Question mark. Well, I'll let someone else, but it's good that you've got that view. But she said, are there no existing administrative structures? And yes, Scottish Government, Scotland as a nation has lots of independent structures. We have our own parliament, our own educational system, our own legal system. So we've got lots of these structures. But what we're saying is the Scottish Government has an opportunity to build some more, and then look at how they're supporting the private sector from these bond issuance, but it doesn't seem that they're doing that. What this will do is just compound the issues we've got. And as Jim said at the start, a big reason for this is to attract more foreign direct investment. And let's just finish on that. It's certainly something that we're going to look into a little bit more. We need some evidence that attracting foreign direct investment is good for Scotland in the medium and the long term. Wouldn't you agree, Jim?
Absolutely. Yeah, I mean, the Scottish Government seems to be oblivious to the fact that foreign investors come here to make profits. They're not coming here to benefit us. They're coming here to benefit themselves. So it might not to happen in the first few years, but in the long term, they end up shipping more money out of the country than they brought in repatriated profits back to their countries of domicile or even into tax havens. Scotland already loses 6% of our GDP through capital outflows from foreign investors.
Yeah, that's right. Well, our figures that we put together for the sectorial balances said it's probably closer to 8% in total of GDP that leaks out of the Scottish economy every year. So although this is a small amount, if this goes out to financial markets and we are paying interest to foreigners, that 8% will go up to 8.1% or 8.2%. We should be saying we will pay interest into the private sector in Scotland so that money doesn't leak out. So on so many levels, using the work that we've done on sectorial balances and understanding about the impact of FDI, all prove there's an underlying neoliberal economic framework that's being used by the Scottish Government. I think this will be the last question, Jim. Can the UK do anything to kibosh any plan like this? I.e., can they make the bonds worthless, boycott them with a few choice words in Westminster? Not sure if they would, but they could. They constantly lie about Scotland just now. What do you think?
Yeah, I don't think that's very likely. I mean, the bond markets have their own motivations for buying and selling bonds. They're more interested in how different types of bonds from different sovereign issuers and the maturities, how all those factors play out in their search for maximising their returns for their customers. That's what they're bothered about. So I don't think that's an issue.
Yeah, no, I don't think so. I think the only thing that would happen is that, for example, if Scotland didn't have a full funding rule and put bonds to the market and then took them back and said we're not getting enough money, you would imagine that hay would be made in Westminster about how we were unable to sell all of our bonds. And these are the issues that that the Scottish Government is deeply concerned about, because it doesn't have the confidence, the commitment, or the understanding where it can go out and explain why this is a good thing, why it's the best thing to do for Scotland. They're just caught up in this really difficult communication bubble that sits under and underpins this neoliberal framework and understanding of the economy. So certainly, I think if we have to pay more for our borrowing, then Westminster parties are quite well within their rights. Why is the Scottish Government paying more borrowing from financial markets when it could borrow less and pay less and interest to the National Loans Fund? So there are big problems ahead for the Scottish Government, so they really better get it right. And last question, Jim. Would one of the primary values of a bond issue be in building the expertise prior to independence?
Yeah, I think
there's a yes but there, isn't there, Jim?
Yeah, there's a great learning opportunity here for people, for politicians and people who are interested in managing Scotland in the future. This is an opportunity to start learning, which is why it's a bit of a tragedy, really, to be thinking that we have to outsource the administration of this to an investment bank.
Yeah.
Well, do it ourselves in-house, and we'll learn in the process. Okay, we might want to get a couple of experts from the investment banks in to kind of help, but don't leave it to them. And that's just reproducing dependence. We need to learn. If you're not willing to take a step forward and take an adventure, you never learn anything.
Yeah, absolutely. So you completely hit the nail on the head. This is a wonderful opportunity, but it's Ernst or EY, I think they're called now. It's EY who've been giving this project to oversee. And as Jim said, it's very likely that this will be given to maybe even not a Scottish-based investment bank or financial house or someone to look over. And this should be an opportunity for us to build state capacity, not to just fund more of the financial services sector. Thank you very much for your questions, Jim. We did more than 45 minutes there. So thanks, everyone. I think I looked at my list, Jim. We got through everything that I'd hoped we would. So I really hope that people will share this and it will be helpful for people who just want to get a little bit more information on what's going on. And I said we had a little update. Jim and I are meeting the Project and Policy Manager, Exchequer Strategy and Analytics Division of the Scottish Exchequer, the Scottish Government, in a couple of weeks' time. So we're going to ask a lot of the questions that we've covered tonight to see if we can get some answers. And Jim, maybe in the new year, we'll come back and tell everyone what the progress has been. Either a show or maybe we'll do a joint article. But I think it'd be really important to keep people up to date about what this plan is and impact. And I think it'd be really important for the Scottish public to understand the reasons for this and why other avenues weren't taken. Okay, thanks everyone for joining us, Jim. Nice to see you. Thanks for joining me on the show. We'll be back soon enough with an episode. Thanks everyone for joining. Please do share this episode and help people understand a little bit more about the decisions that are being made now. But do hang around for 20 seconds more because I've got a little advert. Thanks so much. See you all soon. Bye for now. If you're enjoying this episode of the Scotonomics podcast, please consider joining us on Patreon with a paid subscription for as little as £3 per month. Your support will ensure we can continue to create this podcast. Find the link in the show notes or head over to patreon.com/Scotonomics. Also, please do like, share, and comment on this podcast.